Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So we have our econ show today, and we're going to start off with looking at some broad themes that we've been talking about. One of them is the global population shifts, how we're seeing more kind of sticky inflation in some of the key areas, and there was more weak crop data with the most recent WASDE. Then we want to look at how Fed fund rate expectations have moved higher, why that's the case, where consumer debt is in segment 2. Then we're going to look at U.S. service data. We had some nice surprises to the upside, which is, again, putting in that floor on some of that inflation. Then we're going to turn over and look at the ECB and how rates are definitely going higher. But some of the leading indicators on exports are getting a bit concerning. Not only just imports coming into the country for domestic demand, but also slated for export. And there's more data now coming out on China's leverage. For those that have been following us, we've been talking about this for years now, and it just continues. As you peel back that onion, you're just getting more and more problems that are really arising on how levered a lot of these, not even just companies, but just governments, especially local governments are, and what is that going to mean for growth as well as for stimulus, which is, again, another key reason why the PBOC has put a bit of a pause on what they want to do in terms of stimulus. So with that being said, jumping right into the population piece, we've talked a lot about China and how Chinese population continues to struggle. South Korea set a new record for the worst population growth in all of the developed world. So when you look at the, just now taking Europe and US, you get an idea of just where some of these shifts are. And because the US still has a fairly broad immigration policy, we're able to offset that, which is why it's important whenever you look at the population sets, you have to look at what is happening domestically and then what is coming into the country. In the U.S., still being the largest economy, still being let's just call it a pillar of hope in some shape, way, or form. As someone like myself whose family came over here in the 30s, I'm second generation Italian. So, and this is, again, immigration has been a big part in that bolstering side. And that's something that is still continuing to this and expected to continue going forward. But when you look at the bolster in populations in general, we're not getting that, internally in terms of where some of those are. A lot of that is demographic pivots. A lot of that is housing shortfalls and all of the underlying problems. And then when you look at the labor force shrinking, in general from 15 to 64, you're still getting that movement down. Now, the U.S. is a bit slower, but when you look at China, now this one is being kind, in my opinion, to kind of where the Chinese problems are, because we actually see a fairly stark drop off, which is something that's going to become a bigger and bigger problem as we go forward, because that's going to increase cost. It's going to hurt domestic demand. And if you think about China, which is something that we're going to cover in more detail in segment 5, you're going to get an even bigger problem because you've built all of these ghost cities. You have all of these assets that who's going to live there? You're struggling to fill it now, and now your labor force is moving in the wrong direction, which means that people are not going to, when you look at just that one China policy and beyond. But then you have to think about, well, what happens next? When you look at the grid, when you look at infrastructure, and you look at some of these different pieces, and that's where I think it's an interesting chart. We're having a conversation on Twitter about it in 2 different threads about battery manufacturing. And it's the U.S. is trying to build out a bigger battery component. And for those that know, C6, we have a private equity arm. One of the big things that we're investing in is baseload power. And a lot of that is because of onshoring into the U.S. and because we are having more manufacturing, especially things that consume a significant amount of electricity. Battery manufacturing happens to be one of them. So even if we get half of what's expected to be built in the U.S. on the battery side, there is a significant demand. I mean, look at 908 gigawatts is going to be consumed by this. So when you think about the sheer size of just the amount of power that could be generated from this, but at the same time, that is going to be consumed by it to make the batteries, which is, again, the importance of the grid in general. But you also have to look at Well, where are the raw materials coming from? Where are the semi-finished goods coming from? And a significant amount of that, for those that have been watching our shows religiously over the last, since 2020, it's amazing that we started 3 years ago. When you look at this, a lot of this is sourced from China. We still rely on China for over 80% of those either raw materials, processed goods, or semi-finished goods. And we have to divest that. We have to find ways to address this if we are going to make battery manufacturing and battery storage a key piece. We can get into the failures of batteries. I'm very well versed in it. We'll leave that for a separate time. We just want to talk about the underlying structure of where do we go from here. When you look at Republicans versus Democrats, it's important to appreciate how they view each other, but also how they view China. And that's an underlying problem, because when you look at Russia, everybody has unified that Russia's evil. We have to get off of Russian oil. We have to divest ourselves of Russian natural gas, Russian diesel. But then we have to rely on green, and green, a significant amount of it is coming currently from China, and in the future is expected to come more from China. So at what point do we look at this and say, okay, well, how do we address this? And it's important because obviously Republicans and Democrats, the polarization continues to increase. The U.S. is seeing the same polarization, obviously to varying extremes versus other areas of the world. But conservative Republicans have the most unfavorable views of China, but then Democrats and leaning Democratic, this is one of the few topics both parties agree on. And some of the things that we've talked about, especially when you look at President Trump, President Obama, into President Trump, into President Biden, the pushback on China has carried through. A lot of the laws that President Trump used to enforce different trade sanctions, trade war, if you want to put it under the trade war bubble, a lot of those laws were struck under President Obama. A lot of the numbers he used to support it were President Obama numbers that they did through the IP report, the analysis that was done on some of these key pieces, which is why there is a lot of continuity in that pressure point. Now, so that's on the political level. Now, when you go to the American level, what is the overall opinion of China? Is it very favorable, mostly unfavorable, or very unfavorable? Well, mostly favorable is now 15%. So then when you ask, Americans' views of the threat China's military power presents to the U.S., 66% say it is a critical threat. So again, when you look at the average American, they see it as a problem. When you look at the politicians who are very polarized, China is a unifying form. Then you look at, well, there's this pressure here, but yet we're going to rely more on China for our energy needs away from Russia. So it's like, okay, are we going from the frying pan to the fire? And that's why we have to get serious about what are we doing about our supply chains. We've said from the beginning, we believe it's a basket approach. Solar in the desert sands of Nevada, solar in Florida, great. Wind off the coast in certain areas, solar panels to backstop. But we have to also look at, where does natural gas sit? Where does coal sit? Because they all have a place. Hydroelectric all have a place with this. And then the battery side, has its issues with when it's cold out, when it's the charge and recharge, the inherent softness of silica and the problems of that stratus when you look at the charge and recharge. And then realistically, how fast can I charge the battery and how fast can I draw it down? Because the faster you charge and the faster you discharge, the bigger the electromagnetic field, or the EMF, which the only real way to manage that is by lead, because are we going to bring back the lead trade and line it? So there's pieces to it. Could it be part of the solution? Absolutely. Is it the holy grail? Not yet. We have said on this show multiple times, the person who solves storage is going to be the world's first trillionaire. That is where the opportunity set lies. We have not seen anything. I have done batteries pretty much my whole career at this point. And anytime something looks great in the lab, it fails in the commercial side. It fails in road testing, in the distribution side. And that's why it's important to look at the distributable power availability. That is, how much power do we have to distribute at peak? And that's what we have to look at in trying to manage that. And the problem is batteries don't have the density of a coal brick, of natural gas. And that is the problem when you look at BTU values and the density levels of what's going to generate that level of power and necessity. Not to say that we can't come up with something fantastic 20 years from now, even maybe 10 years from now. I'm not saying that it can't happen. It's just the issues are, and then what are the raw materials for it? How are we going to make it? And a lot of these are coming from Africa. A lot of these are coming from other nations. And all of them, for the most part, are going to China to get processed, to get moved, used, and shifted into the semi-finished goods. But the problem is some of the processing is dirty, and some of the processing, some of the mining is dirty. So when you look at the ESG level, again, this is where the term greenwashing comes from in some of those issues. But then when you turn now to inflation, because for those that haven't watched Osama's Pakistan show, I highly recommend it. He's been very adamant in talking about this. And as someone who lives in an emerging market, who lives in Pakistan and seeing it firsthand, what we're talking about in terms of pretty charts with clouds, he's living it. And that's what we're seeing here. When you look at the current US cycle, you look at the Eurozone cycle, you look at it at the 70s and the 20s, when you go back in time, we don't get a collapse in inflation. And for those that have been following us, we've been saying time and time again that all of these estimates of transitory, it's going to fall off. Where? Like, at what point in the levels that we've had inflation to this scale have we had this drop off? And it doesn't drop off, which is why the view that the US and the Eurozone are going to follow down this path, when you look at the 70s, when you look at the 20s, it takes a lot longer. And when you look at emerging markets, when you look at the integration of the world in general, they're showing you that you're seeing it firsthand that this precipitous drop is just pie in the sky when you look at that level, unless we get really aggressive against assets, unless we get really aggressive against some of these things, and it's going to be difficult to do that. So then when you start looking at, well, let's look at the utility scale energy storage resources by quarter in service. States with the largest utility scale energy storage reserves are in Texas, California. When you look at the megawatt side, but again, that's the balancing piece. How do we balance this? Because energy cost is a big part and a big driver of these increases in living wages, these increases in living expenses. We've seen it in Europe right now, where they've gotten some late cold. This late cold wave is pulling some of that excess natural gas out of reserves. It's still above the 5-year average, but again, it's not as good as it was supposed to be because of this late stage cold move that's moved through. And there's some concerns abroad elsewhere, like decarbonization will take a backseat this year in Beijing. The argument can be, was it ever front of mind for the last 10 years? They may have talked about it at Davos, at COP, at the UN, but they've been going after and trying to find more coal. So China's coal supplies remain tight, gas supplies are under severe strain, and the ability to ensure energy security in the face of extreme weather conditions must be improved. Pressures will be generated by relatively rapid growth in energy consumption, while efforts to reduce energy intensity will face numerous challenges. We must strengthen coal's role as an energy security guarantor and gradually release advanced coal production capacity. So again, China's coming out telling you they're going to look at more coal because there's an issue with baseload. And that's the issue that we continue to have, is what is that base load? And when you look at this, the large scale planned piece versus what's operating, there's a lot of planned capacity, but how effective is it? And how effective is it going to be? And we've seen in California, it's been fairly effective in short spurts there, but then there was a fire, and that fire is toxic. And how do you manage that? How do you, again, create safety around these plants and this ability? But it's always going to be a shared responsibility, a basket approach, because there isn't some white knight or some miracle that is coming out. It's going to be a balanced approach to the grid, to ensuring that there's this base load power. And we have to look at who are our friends. Are we really going to go down that rabbit hole with China? What's happening with Russia, Ukraine? Where is that going to pull from? And that's why geopolitics get very messy at times, when you start layering all of these different energy security concerns and how these supply chains interact with different areas, and how realistically, just as Russia turned off the spigot coming into Europe, well, China could turn off the spigot coming into the US, coming into Europe. Then what? Then now what are your options? And that's why it's important to evaluate these levels. Now, when you look at the recession is, especially in PMI manufacturing, it's obviously going to hurt some of those oil crack spreads. Those are things that we've been talking about. I just thought this was a good chart putting it into perspective. And then the work, 5 days in the office, only 32% of the US population is working in the office right now on 5 days a week. Most of it is, as you can see, is either you have 0 days up to 4 days, and the majority is within this, 0 to 3 days, which is why we've talked so much about where things are, how this has changed in general in terms of underlying flows of just activity levels when you look at gasoline demand and you look at these Monday to Friday figures. So when you look at how people are changing their needs, where things are going in general, not only is food going to be a piece of it, but here's another interesting chart when you look at the U.S. interstate natural gas pipeline capacity on record. So when you look at it, 897 MMCF a day was built in 2022. And as you can see, going back to 1995, that is the least amount that has ever been built, well, I should say to 1995. But that doesn't mean it's a skewed chart as well, because this year and next year we have new capacity coming on, because we have new LNG capacity coming on, which has several BCF a day of pipeline capacity attached to it. So we will get some of that resurgence, but it's important to highlight a lot of this capacity, as I said, the BCFs of a day of new capacity, of pipeline capacity, is heading to LNG to abroad. How much of it is going north? How much of it is going to these areas where we're taking down coal, we're increasing the intermittent, wind and solar, which are intermittent, and we're going to put some batteries, which we know aren't as effective in the cold, but we need natural gas backstops. But if a lot of this gas isn't moving south to north, well, then what? Where is this going to go? How are we going to bridge some of this gap? And that's why, again, selfishly speaking, from C6 perspective, from the PE side, is why we're buying baseload power in the Northeast, in the Midwest, and in parts of the Southeast, because that's where we're getting a significant amount of battery manufacturing. That's where we're supposed to get a significant amount of onshoring coming in. But where is the baseload? We're taking down coal plants on time, but we have a backlog in terms of projects on hold, projects delayed, permanently canceled, because we're not at ZIRP anymore. We don't have zero interest rates. Now we're at a level where the cost of capital is getting more expensive, and some of these projects are not going to be as effective or affordable at this point in time. Now, when we turn to food, global food prices continue to retreat. But again, retreat is relative, because yes, it has come down, but it has come down, but at still very elevated levels. And you can look at it on the year over year, it's come down 8%, but 8% is still just putting us at this insane level. So just think of it where prices are going at 150 miles per hour and we've slowed down 8 miles per hour. that still makes that dead man's curve really deadly coming into it. Now, and we've talked a lot about India and other countries that have put up gates, have put up subsidies. Well, now France is starting a €500 million fund, public-private investment fund to support the agriculture and food industries as it seeks to protect farmers from rising costs and boost food sovereignty. Food sovereignty. France is an exporter of food. So the fact that they're concerned about food sovereignty should give you a little bit of pause, and it's like, all right, well, how bad is it out there? Like, what are we really looking at this point in time? And I think this is going to become a much bigger theme, especially when you start looking at some of the shifts, because when you look at shipping prices remain fairly stable. So it's not a shipping problem anymore. It's an availability problem on multiple levels. Now, this is something that is coming from the UN, looking at the areas to be concerned about. You can see that obviously they've flagged the Ukraine, they've flagged Russia, but look at the US. There's a lot of drought. Look at India in terms of some of those issues, large parts of Africa, and just as importantly, Latin America, where you've seen not only are things on watch, but now you're coming at straight out poor in the sense of the poor crop quality. And we know for a fact India is worse than what is this showing. We know that there are parts of the US that are worse than what they're showing. So even though this chart is showing a problem, it's actually worse than even what this is showing, which is another level of the issues that we're seeing. Argentina soybean production taken much lower, going back to 2009. You can see just where the problems sit. USDA world ending stocks, corn was slightly above the trade expectations. Soybean was slightly worse and wheat was much worse. And that's not surprising, but at the same time, it's going to put into question, well, because so Russia and Ukraine and NATO in general through the UN are going to meet about the grain, the supply chain through the Black Sea. It's supposed to expire on the 18th. They're going to start negotiations apparently on the 13th. And this is why there is a big shortfall in the amount of food available. And just to put it into perspective, Argentina's soybeans are now expected to fall 35% from USDA's original harvest predictions, more than in 2009 or 2018. USDA cut the crop size by nearly 20% just this month, also bigger than any monthly cut in 2009 or 18. The 2023 drought has truly been historic, which is, and again, if you remember, 2009 and those issues created the Arab Spring, the wheat wars, the peasant uprisings. And now world wheat ending stocks coming lower than last month. Trade guessed on a reduction in China, but world less China wheat stocks increased on the month. China corn, soy, wheat imports unched, and again, more problems to come with South American crop production. Soybeans were Brazil was held fairly constant. But when you look at Argentina, there's more issues there. And we actually think Brazil could get a little bit lower. And then U.S. ending stocks, corn came in at a fairly elevated clip as beans and wheat continued to weaken. Then when you turn to wheat, weekly inspections for export coming from the U.S., corn remains strong as beans and wheat weaken. U.S. corn export inspections popped last week, one of the best volumes of the year and above all expectations. However, beans and wheat were below, and this is the second straight week of disappointing bean inspections. U.S. corn exports finally shows signs of life after being, fairly weaker, but now a lot of the flash sales helped, but wheat continues to be our concern. And then wrapping that up, global wheat output to post the first drop in 5 years as we continue to see these pressure points in general. And this even this appears to be a very lofty goal and expectation, which is where we see, again, more pressures on coming to not only the consumer, but also the emerging market world. So that's what we have for you in this side. And also, just to wrap that up as well, support sticky inflation and the problems that the consumer is going to have because everybody needs to eat, which is why we're always so focused on and trying to drive home just the issues that are out there, why that continues to be a problem, especially when we're looking at some of these different pushes on the food side and other sticky inflation points. So that's what we have for you on that front. In the next segment, we're going to go deeper into the U.S. and where we see rates and how consumer credit came out this just yesterday.